Your salary would no longer be enough to sustain your basic needs. Inflation is kicking in. Reuters reported on June 5 that Saudi Arabia has joined a China-dominated central bank digital currency cross-border trial, moving away from the US dollar for oil trade. Truly a devastating move by the Saudi after they abandoned the petrodollar agreement with the US. This could mean skyrocketing prices and financial instability for us. Imagine struggling to buy groceries, pay for your kids' tuition fees, and having to forego your dream vacation this Christmas. You might even need to consider downsizing to a smaller car, but don't worry, there are steps you can take to protect yourself. Saudi Arabia has taken a historic step by joining the Mbridge project, a new digital currency system led by China. This move signifies a shift away from the US dollar in global oil trade, marking the end of the petrodollar era. Saudi Arabia's 2030 vision aims to diversify its economy and reduce dependency on oil revenue, pushing for modern financial systems like CBDC, central bank digital currencies. The US dollar has long been the backbone of global oil trade, providing stability to our economy. If major oil producers like Saudi Arabia stop using the dollar, its value could plummet. This might lead to severe inflation, making everyday goods unaffordable for many US citizens. But how did we reach this turning point? And what can we expect next? What is the Mbridge? The Mbridge project involves several countries, including China, Saudi Arabia, the UAE, and Thailand, exploring cross-border digital currency transactions. This collaboration could redefine international trade, reducing the dominance of the US dollar. Saudi Arabia's participation in this project aligns with its Vision 2030 plan, focusing on economic reform and technological advancement. You see, Saudi Arabia holds significant influence over the global oil market. If they, along with other countries, move away from the dollar, it could trigger a massive devaluation of the US currency. This scenario could lead to higher import costs, making everything from groceries to gas more expensive for American families. So, what could happen if the dollar's value truly collapses? The petrodollar. After sanctions on Iran, Venezuela, and Russia, the US has relied heavily on Saudi Arabia. The petrodollar system has benefited the US by helping finance its debt and boosting its defense industry through arms sales to Saudi Arabia. Recently, Lockheed Martin secured a significant agreement with Saudi Arabia, reflecting the strategic partnership. Losing Saudi Arabia's support for the US dollar in oil trade could hurt the US economy. It would weaken the dollar, increase national debt costs, and potentially reduce revenue for the defense industry, affecting jobs and economic stability. But how severe could the impact be on everyday Americans? Worst-case scenario to US citizen. A worst-case scenario would see the dollar's value drop significantly. This could lead to hyperinflation, where prices for goods and services skyrocket. Everyday necessities like food, housing, and health care could become unaffordable for many. The economic instability could also lead to job losses and a decline in the standard of living. The AI revolution has resulted in many job losses in the market. Now we are adding another special sauce to this cake of desperation. Such a drastic economic shift would impact everyone, especially those living paycheck to paycheck. Understanding these potential changes is crucial for preparing and protecting your financial future. But how can we brace for such economic turbulence? Do you like our video? Smash that like button and subscribe to join our ducklings. Central bank digital currencies. Central bank digital currencies, CBDCs, are a new form of money being developed by many countries. These digital currencies could replace traditional money and change how we conduct transactions. The Mbridge project is an early example of how CBDCs might be used for international trade. China is leading the way with the Mbridge project and running the world's largest domestic CBDC, central bank digital currency, pilot, which now reaches 260 million people and covers 200 scenarios, from e-commerce to government stimulus payments. Other major emerging economies, including India, Brazil, and Russia, are also planning to launch digital currencies in the next 1 to 2 years. Meanwhile, the European Central Bank is working on a digital euro pilot, aiming for a potential launch in 2028. In sharp contrast, the U.S. House of Representatives has passed a bill to ban the Federal Reserve from creating a digital dollar. However, it still needs to pass a vote in the Senate to become law. CBDCs could streamline transactions and reduce costs, but they also pose risks. If not managed properly, they could lead to privacy issues and further economic instability. Understanding these changes helps you stay informed and ready for what's to come. So, how should you prepare for this new financial era? U.S. Federal Reserve Countermeasure. The U.S. Federal Reserve might have to raise interest rates to combat the falling value of the dollar. This could make borrowing money for mortgages, personal loans, and car loans much harder. Higher interest rates would mean higher monthly payments, putting extra strain on household budgets. For many, owning a home or a car might become out of reach. Higher interest rates could also slow down economic growth, leading to more job losses and financial difficulties for many Americans. But what about the global impact? How do OPEC and Bricks factor into this? OPEC and Bricks? OPEC, Organization of the Petroleum Exporting Countries, and BRICS, which consist of super-emerging countries like Brazil, Russia, India, China, and South Africa, are powerful economic groups. If they support the shift away from the US dollar, it could hasten the dollar's decline. This would weaken the US's global influence and economic stability. A weaker dollar means the U.S. could struggle to finance its debt and military expenditures. This could lead to a loss of global leadership and economic hardship at home, affecting everything from national security to everyday living standards. To make it worse, even the EU and G7 group can't do anything about it. The Global East and Global South are running away from us. They try as much as they can to scrap the usage of US dollar in their transaction. Even the Saudi are now open to use Chinese yuan for their oil transaction with the China. So, what's the bottom line for you and your family? What can you do to protect yourself and your family from these potential economic shocks? Consider diversifying your savings. One option is to buy gold. Gold has historically been a stable store of value, especially during times of economic uncertainty. Gold can help preserve your savings for future needs, protecting you from inflation and currency devaluation. It's a tangible asset that can be sold if you need cash quickly. But what other steps can you take to secure your financial future? Think creative with your insurance. Another step is to get insurance that pays out if you're laid off by your employer. This can provide a safety net in case you lose your job, helping cover your expenses while you search for new employment. Having insurance can reduce financial stress and give you peace of mind. It ensures you have some income even if your job situation becomes unstable. What else can you do to secure your finances? Consider this if you are rich enough. If you have excess savings, consider investing in stocks of companies that provide essential services. This includes businesses that produce food, baby products, and personal care hygiene items. These companies are likely to remain stable even during economic downturns. Investing in essential services stocks can provide steady returns and help grow your savings over time. These companies are less likely to be affected by economic volatility, making them a safer investment option. So, what's the final takeaway for securing your financial future? Whatever that you do, please be prepared for the worst. It is hard for me to say this. America is currently losing the trade war with China. U.S. economy is strangling. Together with Saudi, China would make the life of ordinary American feel like never before. Watch this video and I'll see you there.